Hello and welcome into the KE Report. Chad and Corey here, getting an update from Nick Hodge, co-owner of Digest Publishing and editor of Foundational Profits and Hodge Family Office. And Nick, always great to have you on the show to get a look at what you have on your radar screen. And we flipped the calendar over. Haven't talked to you since the New Orleans Investment Conference in November, so took some time off for the holidays, but great to have you back on to kick off 2025 with us with your big picture outlook on what you see as the mega trends for this year. Any big themes, Nick? Any ideas that you have as far as the new administration coming in on the 20th of the month and some of the economic policies in place by the Trump administration?
It's good to be back with you guys as always. And, as we just discussed, we'll be seeing you again for the conference here soon, the Vancouver Resource Investment Conference. So hopefully we'll have a chance to catch up. I feel like the holidays was a blur. We got Christmas and New Year's both in the middle of the week. And I feel like a lot of us took some time off and diverted our gaze from the market. So it's good to get back to it. Unfortunately, I don't know how many major themes I can give you. We're getting back to a Trump administration, obviously. And if there's one thing, Trump has been most known for is being erratic and all over the place. I could take the easy route and say, we're going to make Canada a state and we're going to annex Greenland and then we're going to take control of the Panama Canal. But I'm not really sure how some of that stuff plays into your individual portfolio. It seems to be more clickbaity and driving the conversation, but not necessarily, sir, making any allocation decisions based on what I've heard from the incoming administration and its band of merry men, including Elon Musk and some of the other appointments that have been made. I think everyone assumes that it's going to be an easier environment in terms of regulation. And maybe we can talk about what that means for energy production and commodity permitting later. But the most immediate thing I see is sort of greasing the financial wheels. And let me put that two ways. One is taxes, right? I feel like with a Democrat in office and Biden's willingness to talk about it and fund the IRS, there was really just a vilification of wealth and wanting people to pay what they owe or pay their fair share was a theme that I heard a lot over the past couple of years. And I think we'll get away from some of that talk with Trump returning to his sort of business tax regime, as well as potentially increasing the amount of state taxes that you can use as a deduction against your federal taxes. So I might be getting a bit esoteric here for some, but I think you're going to get a blessing on the tax side of things that we haven't had in the past 4 years. And Shad, I know you're in Washington and I am as well. We added a capital gains tax here in the past couple of years. They're talking about increasing that capital gains tax. And so if you could have some federal alleviation of the tax burden, even if it's in the form of using state taxes against your federal taxes, I think that's a boon economically. It makes those with capital, and we still are in a capitalistic system. It makes those with capital more willing to spend and invest. And then the other thing I see with the greasing of the financial wheels is just in terms of allowing more things. And I'm talking high level now in terms of the SEC and other three-lettered agencies. So the financials have been performing well. I'm an S&P sector guy. Have been looking at the sectors recently, and yeah, tech is still leading it, IT and communication services. But financials, XLF is right there at the top, still delivering alpha over top of the S&P. And so I've been looking at some of these companies that are at the very top of the financial services ladder. I'm talking about, exchange companies, the CBOEs of the world, CMEs, S&P Global, NASDAQ Inc. And there's funds you can buy that own sort of those broker dealer and exchange type companies that I view as a little bit separate from, owning banks or potentially riskier regional banks. So those are some of the big themes I see as it relates to Trump coming in. And then, actual policies, I think is a wait and see thing, man, because the guy's not even in office yet. And I've heard a bunch of different ideas. And like a lot of people out there, I think we just got to let him get in office and see where the rubber meets the road, because hot air is one thing and wet ink is another.
So true. And that's what's going to make this year so interesting, is to see what Trump actually does. But Nick, I want to talk to you about a theme that has been ongoing for years, even decades now, and that is investors focus more on financial assets and unfortunately not paying much attention to underlying commodity stocks. Do you see anything in 2025 that changes this general mentality of investors that could get them a little bit more interested in, I don't care which commodity it is, but some sort of resource stocks?
Well, it's two things, and one is an easier path than the other. The first is, you still got gold at well above $2,600, despite a very strong dollar, despite a very strong bond yield in terms of the 10-year. And so that is going to start trickling down despite the headwinds we saw, with Newmont earnings reports last year and Barrick's troubles in Africa. Across the board, this gold price is going to start trickling down the balance sheet. And I think these producers are going to be start looking attractive just on pure cash flow metrics and the amount of money that's falling to the bottom line. A company I financed long ago, K92 Mines, with a former Barrick asset in Papua New Guinea, I saw reported earnings this morning and was at a 52-week high, right? So there are companies out there that are doing it, that are producing gold, and that should start to attract, if not the meme stock investors, at least the cadre of investors who do look at the earnings reports and the cash flows and the bottom line. The other thing, and this is something we talked about, back at the New Orleans conference in November, is just a reset across the board, right? I mean, we've got CAPE ratios sort of the highest that, not that they've ever been, but sort of in nosebleed territory. Let's say valuations are getting up there, and yet these tech stocks and the financials, which I already mentioned, continue to show buoyancy in the market. So until they're not outperforming sort of the commodity and the precious metals producers, it's tough to attract eyeballs. And then I guess I'll give you a third. I said two, but a third is more M&A, right? We've seen a little bit. We haven't seen a ton of it. And that doesn't create more ounces, but it does create headlines, right? And so that attracts eyeballs, which is what your question was about.
Well, Nick, the other thing is that there's so many people that have done so well in the general U.S. equity markets, in the cryptoverse last year, that there's very little reason for them to look elsewhere. Do you see any change, or do you think it requires that there's a slowdown in U.S. equities and or in the crypto space for there to be more interest in the space? Or can it just be that Q4 numbers come in and they're better than people expect and that brings cash flow into the balance sheets as you're outlining? Does there need to be a correction in equities and cryptos for the commodities to get more spotlight?
It's a nuanced answer. So, I think if you want it, and by it, I mean attractiveness, eyeballs, capital coming into the mining sector. If you want it in 2025, it's going to have to be on the back of earnings reports, as you say, like I was just talking about the high precious metals price, coming into the earnings reports, because the second part of the answer I gave you there, a reset of valuations, i.e., a correction of broader market indices or heaven forbid a crash, I don't see that materializing in 2025. We're looking at 2 to 3% GDP for the next couple of quarters. Nothing looks too crashy. Jobs numbers continue to be okay. Inflation is moderated. Yeah, it's ticking back up from the 2.4, 2.5% low we had back in the summer. So since the Fed cut rates, we've obviously seen the memes and the tweets about soft commodities, chocolate, cocoa, et cetera, hitting record high prices, eggs obviously going back up. But I don't see a crash in the markets, or even a correction, which is ultimately what I was saying is the second thing needed there to put some eyeballs on the mining equities. So yeah, I think it has to be a fundamental attractiveness. And there's a third thing, I guess. I like to keep my options open, and I like to think I have an open mind. And it's sort of the regulatory issues, right? I don't know if issues is the right word, but I'm sort of thinking of multiple things. Your first question was about, Trump and deregulation, and could we see some opening up of mining in America, right? Whether that's, copper in the Southwest or uranium because of things that are going on with Russia. And then the other thing I see is Trump's best buddy recently has been Elon Musk. If you look at Tesla stock, that's sort of gone off like a rocket ship since the election, since November. It's led Amazon and Tesla in the consumer discretionary sector, and that's also been one of the best performing sectors of the past couple of months. If Elon is going to leverage his political capital into a continued support for the EV sector, then with lithium having been in, I guess you call it a bear market for the past 2 years after what we saw in 21 and 22, I think there's pockets of opportunity for certain commodities, certain metals, critical minerals to have opportunity in 2025. If that makes a little bit of sense, happy to talk about that a little bit more.
Well, kind of on that theme, Nick, I know that you like to play the ETFs to play certain sectors, but broadly in the resource space, I think you'd be better off picking individual stocks, which is what you do in the resource space as well. Is that going to continue to be a theme for 2025 then, where you need to be so much more stock specific rather than sector specific for commodity equities?
I think it depends on the size of the equity you're talking about. So I love private placements. You guys know this. I love individual companies in that sense. And I'm typically holding those companies for a much longer time. So, in November, I was telling you about a company called Kingsman Resources that we had just, financed at 25 cents this past fall. That stock was 40 cents when I was telling you about it at the end of November. That's a 70-cent stock now as they head to drilling at their silver asset in Mexico. Silver is not the strongest, it was $35 in mid to late 2024, has come back down closer to 30 now. There's not a lot of salivating or frothing at the mouth about silver, and yet that individual equity has done really well. Whereas I look at an ETF that I own, like SLVP, which is a metals, silver metals and miners ETF, hasn't done as well as some of these smaller equities that I've funded individually. And then I guess sort of the same in the uranium space, right? But almost to the opposite, the inverse of that, where some of these more liquid uranium names, the Denisons, the UECs, the Energy Fuels, the Encore Energies, have been able to catch more of a bid lately than some of the smaller names I follow, like the Sky Harbors of the world, right? And so, that coincides probably with a softness in the uranium price, but I think it really depends on the size of the equity, what kind of investor you are, and what kind of network you have, right? I'm in the fortunate position to be close to a lot of these companies and get invited into a lot of deals. And that makes it easier for me to sort of parse things out on the small end of the spectrum. When it comes to doing due diligence, though, on individual larger companies, especially the producers, the larger producers, I don't do that as much, and so I'm more comfortable approaching it from a macro standpoint and investing in those larger companies through an ETF, because I spend more time on diligence on the smaller companies, right? And I'm not parsing out balance sheets of Agnico Eagles and Barricks and Newmont. But I do both things, and the smaller the company, I think the easier it is to, at least for me, to buy it individually. So that might be a little bit weird or different or unique, because some people say, oh, these penny stocks are dangerous or they're risky, et cetera. And yeah, that's true. But you can also, I can't phone up Mark Bristow, right? But I can phone up the CEO of a lot of these other companies by nature of my seat and how I've invested and just what my career has been over the past 10 or 15 years. So I guess that's sort of an advertisement, right? If you can't do the due diligence on these small companies that you like, that's sort of one of the things that we provide.
Well, there you go, folks. It's just another reason to check out Digest Publishing and some of the deep dives that Nick and his partner Gerardo do on a lot of these companies. Now, there are times to be a stock picker, even in the producers, where you can outperform the ETFs. And there's still some of them so small, even the mid tiers, that you still can get in touch with management. So different strokes for different folks. But you brought up an interesting point there with the uranium stocks. We've noticed this for a while, Nick, that the producers in any sector tend to run first, but then it usually trickles down into the developers and then eventually the explorers when a sector gets hot. Uranium was interesting in that a couple of years ago, it was really racing, 2020, 2021, probably the biggest rip we saw. And then another big rip, 2023, moving into 2024, the beginning of the year. But it was really the producers that led both charges, and the explorers and some of the developers didn't have as much traction. Now, some of the excitement in uranium is because of the strength of nuclear power and all the positive news flow. And there is a bevy of news flow, even since we've talked last, that's just another set of tailwinds for nuclear power. It does seem like U.S. producers are getting the premium, and some of the developers in Canada. Any other thoughts or insights you have in uranium miners, or let's even throw into the mix nuclear stocks, which have done incredibly well the last 6 months?
Yeah, I obviously like uranium. I'm a fan of the space. I'm a fan of the technology. I'm a believer in it as a true baseload source of clean emission power. So, you're alluding to the Inkai JV that sort of happened or didn't happen, an extension of their license in Kazakhstan. It's a JV between Cameco and Kazatomprom that produces, I don't know, 2, 3% of the world's total mine production. Just over 7 million pounds a year come out of that project. And geopolitics are seemingly playing a role there in the contract not getting extended. And therein lies sort of the answer to or the reasoning for one of the things you said, the U.S. producers are fetching a premium. Yeah, there's wars going on all over the world, and Russia is banning uranium preeminently or preemptively banning uranium exports before the U.S. can sort of get to it. There's a real realization, I think, occurring globally that the mineral supply chains are precarious. So that's one thing. That's one reason the American producers are catching a bid. They're also more liquid, which I mentioned, right? You can buy them on a big exchange. They're easy to buy and sell. And outside of Russia, the other thing is that jurisdiction matters. You know, I remember giving uranium talks 5, 6, 7 years ago, and people asking about jurisdiction and African producers. And I remember a lot of fervor about a company called Global Atomic. And my stance was always like, I don't invest in uranium in Africa, man. There's no need to. I mean, I can go there, but it's not in my backyard. It doesn't have the rule of law that we have here in North America. And lo and behold, you've had a series of coups and in West Africa and in Central Africa and in other African countries. You've had a local will to force out sort of the French, basically, the Nigers of the world that have formerly French colonial influence, and so these issues are real, and they materialize in permits being delayed or revoked or assets being nationalized. And you guys live in this world. The geopolitical scene hasn't cooled down any in the past 2 to 3 years. So, if anything, I've seen more consistent steps towards World War III just being affected through proxy wars, et cetera. And so that's why the North American and the Canadian producers are fetching the premium. And then the other thing on the small side of the spectrum that I've noticed is hasn't really been a lot of excitement, right? Like I followed some of these prospect generators, and I followed some of these other companies that generated a little bit of excitement for a while, the Labradors and now the Athas, et cetera. And I've seen some meters drilled, but it's seemingly a lot of smoke in recent months and years, and not a lot of fire in terms of new discoveries that get investors excited where there have been new discoveries in sort of the gold space. So, and at the same time, sorry, I just keep going on uranium. Sometimes I think of things like we have these large deposits that haven't been mined yet. Like Arrow is still in the ground. Patterson Lake is still in the ground. And those companies are even starting to catch bids. The Fission Paladin merger just got wrapped up. I think it just finally got its final blessing here in the past couple of weeks. The shares in my account are still a number. I haven't even got my Paladin shares yet. And I look at some of these smaller ETFs. I was looking at the Sprott URNJ just this morning, and Paladin's the number one holding in that thing. So you catch me in a catch 22 because I know they have an African asset, but now they have a major foothold in one of the largest, highest grade undeveloped Athabasca projects in the world, and those are the projects I think that we need to look to for the future of supply.
Absolutely. And you know what? You are right. There are these mega deposits out there that are just waiting to get developed. It looks like they're going down that road, but the exploration side of things has been so disappointing. A lot of these companies raised money early last year and went out and, as you said, they hit smoke. They really didn't hit much. Is there anything on the exploration front in terms of the uranium stocks that has you excited right now?
The immediate answer that comes to mind is not really. And then an extension of that is behind the scenes, we're working on a company that's taken some assets that have been in private companies for a while and is going to make a go at listing here in the next couple of months. They haven't even raised their round of funding yet. The holidays got in the way, and we'll be doing that this year. These are Canadian assets. There's an Athabasca asset, but there's even a Manitoba asset and an Ontario asset. And some of these are polymetallic, right? So that probably is the answer to the question. If you can get a little bit of flavor, polymetallic, sort of Olympic Dam style, not just uranium, but maybe a uranium company that has some shots on goal at a really big deposit, polymetallic. That's the company I'm working on right now, and maybe I'll tell you more about it next month.
Well, we'll keep our fingers crossed that it goes well, and we look forward to hearing the update when you're ready to share it with our audience. I know you got to share it with your audience first, so another soft plug there for Digest Publishing. But I want to bring up a point you just made about polymetallic. There are certain metals that in concert make a project more attractive. And I know there's a company you've been following for literally a decade that is a gold company that has an antimony kicker. And I'm talking about Perpetua Resources, traded on the TSX under the ticker PPTA and on the New York Stock Exchange under the same symbol, PPTA. Now, Perpetua used to be Midas Gold for people that remember that. And over time, the Stibnite project, even though it's a gold forward project, gained more and more traction because of the critical minerals element, because of that antimony, and because it's a mineral that's in high demand by the US government. We just saw just this last week one of the key permits drop that was needed to finalize the project moving forward. Maybe speak to this as an interesting case study and getting in early, watching things develop, and watching the sea change happen from, obviously the interest in gold still there, but also the rise of critical minerals, funding, and urgency to get these kind of projects developed.
Absolutely, Shad. We always knew that the antimony was a critical component of this project. It's much smaller than the gold component. There's 4 or 5 million ounces of gold on the books. There's more gold than that there once they, start exploring and mining. The antimony component is smaller, but nonetheless, it's sort of the largest reserve of antimony in the U.S. and will be sort of the only source of production once this mine comes online. That wasn't lost on us. A big part of my career, one of the main theses on which I invest is something we've already covered a little bit in this talk, and that's the flow of metals from the east to the west isn't sustainable. And whether that's Russia or whether that's China, you can't have these companies having a stranglehold on production, and not just production, but processing. A lot of your viewers know this, but this is something I figured out. You mentioned this is a 10-year-old story. Like, I've been on this thesis for a decade or more now. And it's very justifying. It's very gratifying to see it finally play out, to finally see the governments get this, right? And so, yes, you're right. The antimony story in terms of Perpetua became to the forefront in recent years, even though the antimony was always there. And so, to really get our history right, this project, the Stibnite asset, produced antimony for World War II. They were awarded a plaque from Congress after World War II was over that credited this mine with shaving, I don't know the exact amount of time, but with shaving so many months off the time it took to win the war, and thereby saving so many lives because of the antimony that came out of the ground there. And then it ended up being a Superfund site, essentially. Mining went away in the 30s and 40s, and it was blocking a creek and salmon migration, etc. And yet, even though the company's plan was always to remediate the site as part of their development, it faced really staunch headwinds, and it was always under the guise of local and indigenous tribes. But really, as I understand it, and this is really some unfiltered info from someone who's been involved in this company for over a decade, is like, the local natives, were sort of on board, right? I mean, the project was going to restore salmon migration. It was going to restore the river. That's what they're interested in. What we saw really was NGOs and quote unquote, green organizations based in big cities that were funding this opposition through the guise of native opposition, right? So hopefully you can read between the lines there and understand what I'm saying. If there's a New York-based green organization that can say, we're fighting this mine in Idaho, and they can send out mailers to their fundraisers, it looks good on them, even though they leave out that the development of this mine in Idaho would actually improve the land as it sits right now. So we're getting way inside baseball. But what ended up happening is the US government realized, look, like, we don't have any other antimony. China ultimately ended up curtailing antimony supply. That's been in headlines in recent weeks. And so the Department of Defense was giving Perpetua millions of dollars well before even the draft record of decision was received. So the writing was on the wall. They got their draft record of decision last fall. And then what we just got recently was a formality, just a checking of the box, a record of decision, thoroughly rubber stamping it and saying it's approved. A couple of takeaways there is that this still takes a long time. I've said this a bunch, but this mine went into permitting in 2016. It's the year my first daughter was born. And this year we're in third grade, right? And the mine just got approved. So I made a joke on Twitter the other day that, this is when geologic time starts matching up with bureaucratic time, right? I mean, it takes forever to get these things approved. But they're starting, and I'm talking about the government, they're starting to realize it, right? Like, sorry, I'm going to cuss, like, oh shit, we don't have any more antimony. We don't have any antimony processing. We really need to get on the ball with that. And that's what I mean in terms of the North American uranium production that I was talking about like 5 minutes ago as well.
So with the developments of this long overdue asset, Do you see this opening up opportunities for any other stocks, whether that the market has already taken notice or anything that you think investors can get ahead of?
I mean, it should. I mean, this is a stock that we talk about the gold equities, maybe being challenging, but this is a stock that went from $4 last year to 13. I mean, the Perpetua had a really good 2024. And then there's other Idaho miners, right? We've seen Idaho come on recently as a prime jurisdiction, in terms of the ratings it receives from the Fraser Institute for permitting, endowments, et cetera. Yeah, there's other companies around. There's Revival Gold, for example, I've been involved in for a while, and it has a past producing asset there. Integra's got an asset in southern Idaho. It should make people realize that the Idaho is an attractive jurisdiction, but I haven't seen it sort of translate into immediate price appreciation for their neighbors yet.
Yeah, it's a good point, Nick. And then as far as the critical minerals theme overall in the US or in Canada, we'll bring in either country into this discussion. There were a lot of funds that were given out for some of the lithium projects. There's a little bit that were given out for some of the nickel projects as well. Do you think that translates eventually into copper? Every year it seems like there's people banging on the war drums about copper, and rightly so. When you look at the supply demand metrics longer term, there's a huge mismatch that has to be adjudicated by a rise in the price, and there has to be some supply coming online. But I don't see a lot of mines getting built, especially domestically. And there's the potential for mines in Arizona or in British Columbia to get built in either country. Do you think eventually some of this critical minerals fund and focus, will the new administration also start looking at copper as another potential strategic or critical mineral?
Well, I think they have to. I don't know if it's going to be in 2025 or not, but I've started seeing articles about how Trump could use exactly what you say, copper mining in the American Southwest as a political football. I also saw headlines this week that Ivanhoe Electric, which is a different company than Ivanhoe Mines, Ivanhoe Electric and BHP are starting to do some initial surveys in the American Southwest. They're smarter than I am, those two companies, and it would seem that they know something maybe in line with what you're talking about. And I might just take that question and run with it in a little bit different direction, because I mentioned Ivanhoe, and I might talk about Robert Friedland for a second, who's one of those people who's always pounding the table on copper. The next copper bull is always right around the corner. And I want to just get greedy and talk about one of my own interests here, right? So his other company, Ivanhoe, is, I don't own it right now, but I've owned it in the past. And Kakula is, one of the lowest carbon intensive projects in the world as it relates to copper. And Robert Friedland knows this. So last time I talked to you guys, I was talking about clean copper contracts and the need to track where this ore is coming from, and how many emissions are emitted and associated with mining that copper, et cetera. I think that's what you're going to see. So, you asked me about the willingness to make copper a critical metal. I mean, it really already is in many respects. I think in Canada, it's already on the list. I'm not sure about the US. But what I really think we're going to see is these levels of mining contracts. You even mentioned nickel. And so, there's new exchanges that are popping up out there that are going to, in fact, that, ABAX, I don't know if I've told you guys about that, but that's the company that's partnered with MineHub, which I've mentioned to you multiple times before. They have a new nickel sulfide contract that begins trading this week, January 10th. And I think you're going to see increased competition for these metal contracts in terms of tiers, how clean, how green they are. And there's a lot of investment opportunity that goes into making that a reality, and to tracking all that data. And so, taking it all the way back to your question, Shad, we had the infrastructure bill that passed a couple of years ago, and you mentioned the investment in lithium by the U.S. government. They make it that bill made it so that to get your tax incentives for EVs in the U.S., you got to have a certain percentage of the minerals mined in the U.S. And so all this stuff ties together. And so, yes, I think you do see more willingness to approve and these projects and get them into production in America, because the NIMBYism hasn't gotten us anywhere, and there's a very real need to secure these supply chains, so you can have phones in your hands and batteries in your car, right?
So, as great as it all sounds, when governments get on board and should reduce regulation, should speed up permitting, will it actually help any of these share prices broadly?
I think it will. So Mine Hub, I was telling you about just a couple of months ago at 30 cents at the end of November. That's hit 40 cents. And I specifically remember, Corey, you asked me about the cost of capital. So it allows these companies to raise money easily, either by bringing in large partners like major producers or smelters or refiners who need their input materials to be cleaner. So they have a natural sort of strategic investor. And it also makes the data more transparent, so they can go to their bank or they can go to the Wheatons and the Francos of the world and get these sort of more, strategic or inventive types of financing streams and royalties, et cetera. We always hear about how the mining sector is capital constrained, how it's been harder to raise money. And then maybe I'll just cap it off with this, like Cobalt Minerals. This is, Jeff Bezos's and Bill Gates' AI mining company where they're using AI to find new mineral deposits. They just raised money a couple of weeks ago at a $3 billion valuation, and they've never mined a pound, an ounce, or a ton of anything, right? No PEAs, no bankable feasibility studies, no PFSs, and they're out there with a $3 billion market cap. And so, you know, just to bring this talk full circle, we talked about at the beginning, tech stocks driving the market, tech stocks having high valuations. Well, what if mining stocks become tech stocks?
It's an interesting question, Nick, because there are some new processes. We kind of got into that in our last discussion, some of the different things that Glencore and Rio Tinto were doing as far as processing, some of the other companies involved. But people are considering using AI and big data, to analyze drill results and to parse through numbers. There's more and more people trying to use that as predictive discovery methods. Technology being involved with mining. Any other themes in that regard that you see as big trends that we could look forward? Something changing an old industry into a new industry.
Yeah, I mean, I don't know how investable they are, but I see things all the time. Just yesterday, John Deere was unveiling autonomous mining equipment, right? Haul trucks that drive themselves. And so this stuff is happening every day. When I was talking to you in November, Newmont had just taken delivery of their first all-electric mining truck, right? And so this stuff is happening in real time. And I think mining is an antiquated industry. And as I just pointed out, some of these companies who are doing it in a new way, or who are helping these other companies do it in a new way, are seeing increased share prices and an increased ability to raise money.
Yeah, that's the biggest change too. Lower cost of capital would be awesome. And hey, it'd be great if mining stocks could turn into tech stocks. I don't know how easy of a road that might be, but at least some sort of new technology can help out these companies and hopefully lower some of the cost. Do these new technologies, though, change any of these supply demand metrics that we keep seeing that show just how undersupplied key markets like copper, even like silver? Some people are arguing how undersupplied that is. Do any of these new technologies change some of that narrative?
I mean, yeah, I think they do. Whether it's increasing the speed at which we can recycle metals and minerals that are already in devices. I look at companies that are recycling hard drives to get the rare earths, for example. Shad mentioned new leaching technologies a couple of minutes ago, which I've discussed with you two previously. And yeah, like we just saw Newton come in and make a big investment in Aldebaran, right? That's one of the larger undeveloped copper gold, porphyry projects out there. If we can apply these new technologies to them to make the extraction more efficient and more expedient, then of course it helps increase the supply. And then the last thing is sort of applying these technologies to the waste dumps, right? Where we have a lot of waste and tailings still laying around the mining sites around the world, that if we can, just get one more squeeze of that orange, then ultimately, of course, it's going to increase the supply and augment some of these things. I'll tell you what I tell you before. We still need to find new mines. That's not going anywhere, but there's a real economic and environmental case to using these technologies to do more with what we have, either in terms of what I just said, tailings, waste that we can extract more from, or recycling. So, yeah, it's not a panacea, right? I don't think there is one for this whole energy sort of metals nexus that we have going on, and how much of them we need for our modern grid and our modern tech ambitions. But it's not nothing, and it's certainly worthy of investment.
Well, Nick, we'll keep following along with some of these technological discoveries, breakthroughs, innovations as they're applied to the mining sector. I guess just as we wrap up, I know this is not really a fair question, but I'm going to put you on the spot anyways because you're a diversified investor and you look at a lot of different sectors. But if I had to pigeonhole you down to one commodity resource sector for 2025, gold, silver, copper, lithium, nickel, oil, gas, which one are you most animated by if you could only pick one?
Gold's looking really good. I mean, I think lithium could be a comeback story, but gold's the easy answer considering where it is relative to how strong the dollar is and how strong yields are and the uncertainty of geopolitics and the tariff situation.
All right. Well, we'll wrap it up there, but I just wanted to get your thoughts as we kick off 2025 and obviously probably a lot of tailwinds for the precious metal sector. So, for those that are listening in, if you want to get more thoughts and ideas from Nick, definitely click on the link below. It takes you over to Digest Publishing where you can see all their different offerings. Nick, always great to have you on the show and dive into these different areas of how the macro weaves into the micro. And as always, looking forward to our next conversation.
Appreciate you guys. It's always fun.